just from a broad perspective, I mean, this is it's a flame out on the upside of debt. I mean, what you're seeing is we've reached debt saturation. And if you relate that to the overall system, which is a Ponzi scheme, I mean, there's no question about it. The whole system is fractional reserve. We're at a point now where they cannot expand debt fast enough to keep this thing going. And thus you're already seeing sectors that are deflating.
Welcome to Discourse with Christian. I'm your host, Christian White, and today's guest is Bill Holter. Bill is a former Wall Street branch manager, licensed bullion dealer, and known for his market commentary and expertise in gold and silver. Bill, thanks so much for being on the show today.
My pleasure to be here. Thank you.
Would love to start off asking, what's your current macro take as it relates to financial markets, global economy, perhaps geopolitics?
I think just from a broad perspective, I mean, this is it's a flame out on the upside of debt. I mean, what you're seeing is we've reached debt saturation. And if you relate that to the overall system, which is a Ponzi scheme, I mean, there's no question about it. The whole system is fractional reserve. We're at a point now where they cannot expand debt fast enough to keep this thing going, and thus you're already seeing sectors that are deflating.
Could you share could you unpack that for us?
Yeah, I mean, just look at real estate. Look at commercial real estate. Commercial real estate, I don't know, what's the number? It's down, 30%, 40% plus. The housing market is now becoming quite soft. And I mean, that's a function of higher interest rates, obviously. And when we're talking about higher interest rates, you've also got to look what President Trump said today. Oh, the Federal Reserve needs to cut rates 1% because of all the debt that's maturing. Well, the problem is where interest rates are now reflect zero risk premium. There's no risk premium whatsoever. So another way to say that is, in my opinion, rates should be much higher than they are now. But in a system as indebted as it is currently, what are higher interest rates going to do? It's going to crush the system.
And as it relates to his administration, I saw today, I think it was on the Wall Street Journal, that Lutnick, as it relates to current trade talks, it doesn't look like things are going to really pan out much there. I don't know if you have any comment on that or on the trade stuff going on.
Yeah, we'll see. You're looking at a pie that's the same size, or certainly not expanding like it had in the past. And now you've got, now worldwide, you're going to have trade wars, and that's what you're seeing the beginning of.
As it relates to the trade wars, is there something in particular that is most alarming to you, or certain data points that you're tracking, and so on and so forth?
Well, obviously, the most concerning would be trade with China. And I say trade with China not just because, they fill up Walmart, Costco shelves, but much more importantly, there are 90 something plus percent of the supply for rare earth minerals. And without rare earth minerals, there's many things that can't be done. And most importantly, they're used in all kinds of military applications. So we get shut off of rare earth minerals, which they're saying today that the rare earths are going to continue. And as soon as I saw that headline, I said, yeah, but for how long? When push comes to shove, we're going to be shut off of rare earth minerals, and that's going to shut a lot of our capabilities down.
What do you see as being the how do you see things going about then if that continues to be the case, and so on and so forth? Or I don't know if you could unpack that further as far as rare earths, things of that nature.
Well, rare earths are used in all types of applications, and as I mentioned, military applications. We've offloaded tons and tons of our ammunition. Uh, we've helped Israel and obviously sent buku amounts to Ukraine. How do those get replenished? You can't replenish those without rare earths, and that's the problem. If we get to the point where uh, it, we're close or we're right at the point of a shooting match, do you think China is going to be sending rare earths so that the United States can use them to build munitions? Not going to happen.
And as it relates to the geopolitical stuff going on, obviously China, Ukraine. What's your current thoughts as it relates to those conflicts going on? How do you see things more or less shaken? I know obviously you don't have a crystal ball.
Uh, I guess my concern is it's if this turns into a shooting war. From a conventional standpoint, the U.S. can't compete. My fear is that the U.S. military is going to be shown to be a paper tiger, which leaves what? Nuclear weapons.
Yeah, and that obviously won't last long. As it relates to perhaps over here in the states, what are your thoughts? Obviously, we're 100 plus more or less days into the Trump administration. Can you share your current thoughts on what the administration is doing, things of that nature?
Yeah, I mean, the first 100 days there were some very good things. Uh, I mean, obviously, what he's doing with the border, I think that's super. But there are some things that are really concerning. I mean, how about the anti-Semitism laws they're trying to put in place? If you speak ill about Israel, you go to jail. What about the First Amendment? Uh, I wish Trump would tone things down somewhat. Uh, yeah, it felt good to finally be out from under the thumb of complete falsehoods, which is what we had for 4 years. I mean, everything was a lie. And still, there's a lot that's a lie out there. Um, but I think that Trump does need to tone. I mean, what did he do just 2 days before he took office? He does a meme coin. That's a bad look. And I mean, he's packed his cabinet with, if you want to call them, war hawks. I'm not so sure that everything that we heard from Trump is real, as far as not wanting war. It looks to me like he's packed his cabinet with people that do want war.
Particularly perhaps over in the Middle East as well.
Right. Well, I mean, you have to understand the military-industrial complex. I mean, they feed off of tension, and they're if all of a sudden things go peaceful, their income stops, and that's they're in charge of a good portion of, if you want to just call it, policy. And another thing is,
Yeah, I
we've been promised all kinds of things were going to come out, the Epstein files, uh, the January 6th stuff. We've been promised that all kinds of things were going to come out. Nothing's coming out. One that I thought was pretty humorous was they're talking about auditing the Fed and auditing Fort Knox, West Point, etc. I don't think that's ever going to happen, but it sounded good.
How do you think that would go down for as if they don't find anything there, so to speak?
Then that's complete bullshit. And I say that because, I mean, what did the Fed do after the 2008 crash? They lent what, 16, 17 trillion dollars all over the world, more than half to foreign institutions, and we didn't find out about that until 2010 or 2011. I'm sure if you audited the Fed's books, you're going to find all kinds of dirt. As far as Fort Knox and West Point are concerned, there's not been an audit since 1956. And the simple question is, why not? And the reason is, well, the reason we've been told back in the 70s or 80s was, oh, well, it would be too expensive. It would cost $25 million to do an audit. So we're left to what? Just trust that metal is still there. And even if there is a good portion of the metal still there, has it been leased out? Who owns it? Where's the paper trail? Uh, I I think if there was actually an audit of the Fed, a real audit, or a real audit of Fort Knox, West Point, Denver, uh, you'll see a complete collapse of the entire Western financial system because truth uncovers fraud, and the system runs on confidence, and fraud breaks confidence.
Yeah, I remember as it relates to obviously we're talking about sound money and things of that nature. I remember you mentioning on another episode, I don't know if it was Andy Sheckman, about how I think it was when you were in college, you came across something in a textbook alluding to them not knowing how the crash of 29, they don't know how it happened and things of that nature. Could you share kind of your journey and how you kind of became
Yeah, that was
more in tune, if you will, and your
that was day one of my journey. It was the very first class that I went to. The very first book that I opened in college was an economics book. And at the bottom of the first page, top of the second page, it said, "We don't know why the Great Depression happened, but we do know it can never happen again." And I looked at, I've read that, and at 18 years old, I'm looking at it saying, that's total bullshit. If you have no idea why it happened, then how can you say it could never happen again? And that's what started me digging. And I mean, the bottom line, the reason the Great Depression happened was too much debt. I mean, there's other reasons, there's other factors involved, but the system got too indebted and all credit bubbles blow. And we are in the biggest credit bubble of all time. You could say today's credit bubble is bigger than every credit bubble combined in all of history prior to where we are now. And when that blows, what happened in the Great Depression is going to look like good times, in my opinion.
Can you, for those in the audience who are not aware about your positioning or your hedging, how are you, I guess, preparing for this inevitable, in your words, mathematically kind of cooked system, that this, unraveling?
Yeah, it is mathematically a cooked system. The debt cannot be paid back in current currency terms. And when I say currency terms, I could have said dollar terms, but this is global. It's not just a US or a dollar problem. Uh, the bottom line is when this thing goes down, you're going to be on your own. Is that going to be a week or 2 weeks? Is it going to be 2 months? Is it going to be 6 months or more? If it's 6 months or more, how many people do you think are going to be able to survive? What percentage of the population will survive without being able to get gasoline, uh, with intermittent or not having electricity? Is your water clean? Your, the skills to survive no longer exist in the population. If you go back to the 1930s, there was a vast amount of people that farmed, that ranched, that knew how to live without going to Walmart, without going to a gas station, without going to, you know, uh, McDonald's or whatever. People don't have the skills today to survive on their own, and that's where we're headed. You're going to dial 911, and nobody's going to answer.
It's pretty spooky.
Well, it's pretty logical. I mean, if you if you understand that the entire system, everything that you do every day involves credit. Anything that you touch, anything that you use, credit has been used to create that. When credit breaks, everything's going to stop. The supply chains will stop. Distribution will stop. Production will stop. Everything's going to stop. And I mean, that's just a logical uh, expansion from credit stopping. And again, we're in a system that it is mathematically untenable, and we are going to have a credit slash currency crisis. Normally, I would say just a credit crisis, but because all the currencies in today's world are fiat, meaning unbacked paper currencies, the only backing they have is from debt issued by the sovereign nation. And if you're basing a system on credit, you're basing the foundation is quicksand. Years ago, when we were on the gold standard, gold was the foundation. Gold can't default. Debt can, it has, and it will.
As it relates to how people can posture themselves, if you will. Obviously, you're quite fond and bullish on having metals and things of that nature. How else can they? I mean, other assets or things of that nature. Obviously, self sufficiency is one. Other.
Well, self sufficiency is the number one. You've got to be self sufficient. You've got to be able to feed yourself. You've got to live. I mean, if you don't live, then well, it doesn't matter how much gold you have, or silver, or stocks, or whatever. So you got to live, and so self sufficiency is first. And part of self sufficiency, you've got to be able to protect your position. And if you're in a city, if you're in a metropolitan area, how do you protect your position? You can't. You need to be rural. You need to get away from population, uh, because those who don't have are going to look to you because you do have, and they're going to try to take it. Um, you want to get your assets out of the system. You mentioned, obviously gold and silver. Well, gold and silver, the reason you go to gold and silver is because they are money. They're real money. And during bad times, what's the advice? Go to cash. Well, it used to be when you went to cash, it was backed by gold. That's no longer the case. Going to cash now is you're going to a commercial paper market that's debt, and debt defaults. So the reason you want gold and silver is you will have uh, you'll have capital after this thing goes down. You'll have a lot of capital. You'll People that are sitting on gold and silver will be considered mini banks because there's so few people. Less than 1% of the population own gold and silver. You want to get You don't want intermediaries between you and your money. I mean, if you're going to own stock, obviously, when I say obviously, this is my opinion. You want companies that make real things that are necessity. You want uh, basic type companies. Agro companies, oil companies. You want companies that produce things that people have to use on a daily basis to survive. Now, if you're going to hold those stocks, you want to get those certificates. Um, a year ago, it made the rounds, and it was a big, broad splash, the Great Taking. And I just want to say that the Great Taking is absolutely real. Everything that David Rogers Webb put out is footnoted. These laws are in place. The ink is dry. And when banks go under, when brokers go under, when insurance companies go under, the law says that they can take your deposits, your stocks, your cash values, and they can use that to save the company. Money in the bank, stocks, they're not yours. They're technically and legally owned by the bank or by the broker for your benefit. You are considered a subordinated creditor. And in the case of banks and brokers, you are the most subordinate creditor, meaning you're the lowest on the totem pole. You're going to get paid back last, which means you're going to lose your money first. So you want to ask your broker, you want to tell your broker, I want my certificate. And the way to do that is tell your broker to ship the securities to DRS, direct registration with the transfer agent. Once it's there, then you instruct the transfer agent to send you a stock certificate. That certificate is your proof of ownership. It's like a deed or a title. It can't be taken away from you. Now, can the company go bankrupt? Yeah, of course. Well, whatever stock you own, yeah, there's always a chance of them going bankrupt. But you don't want to own something that turns out to be a good investment, but you lost it because your broker went down and bailed you in. Bail-ins, and I mean, the FDIC has come right out and said that there's not going to be bailouts in the future. There's going to be bail-ins, which means they're going to take your money on account at banks.
Yeah, I remember hearing a bank like that. I don't know if it was in Oklahoma or somewhere in the Midwest where there was a bail-in. As it relates to think, oh, I think you're going to say something.
Yeah, I was just gonna say I did not. I did an interview yesterday and had not heard about a bank that was bailed in. It was very small. I understand there's only like 8 million in deposits, but people lost half their money. So people, people that had 8 million got 4 million and were merged into another bank, and that's the first time that I know of that depositors were not made whole.
And I think of that, and then I also think of the Silicon Valley Bank incident that happened a couple years ago, and those being case studies.
Right, but those banks, I mean, people were made whole uh, in that instance. I mean, people were made whole back in 2008 and 9 by merging bad banks with supposedly good banks. The problem is when this goes down, what does FDIC have? Something like 125 billion to protect the entire system. I mean, it works out to be like a penny on a dollar or less that they're going to use to protect your deposits, and that'll be wiped out with just one big bank going down.
And then a quick question: you obviously were talking about David Rogers' Webb's book, the Great Taking. You mentioned about having the certificate for the securities, and if I misunderstood you, correct me. But I know if you have that certificate, that's you've got it in hand, so to speak. There's value in that. But would that help negate the implications of this of the securities revisions that they've done under the Great Takings thesis, or is that
Yeah,
still
absolutely.
you're still screwed?
Sure, no, absolutely. If you have the certificate in hand, you don't care if Merrill Lynch or Bank of America or whoever goes under. It doesn't matter. You have the certificate in hand. It's yours. There's no one between you and your money. The only thing you need to worry about is does that company do well or not do well? Uh, and again, because I'm not sure if I mentioned this, but uh, in the situation of bank balances, you're going to get bailed in. So go to cash, and true cash is gold and silver because they cannot bankrupt. They cannot default.
How much of one's portfolio, in your opinion, more or less should be allocated to that?
I've had that question asked to me. I'm going to say for the last, I don't know, 5, 6, 7 years, people ask, well, how much gold and silver should I own? And my standard answer now is you put into gold and silver whatever you don't want to lose.
Roger that. As it relates to banking and things of that nature, one of the things that's been of interest to me, and I've asked some other guests that I've had on, and this is kind of along the lines of like the book, The Tower of Basil, if I'm saying that right. Yeah, I think that was the book. And then, obviously, the Creature of Jekyll Island, things of that nature. Wanted to shift to things of that nature, and obviously that kind of ties in with the Great Takings kind of premise of you not having control or custody, and that other powers are. In your opinion, who is pulling the strings in the banking industry? I've heard people mention the BIS and people behind that. In your opinion, who are those entities or players, if you will, if you care to dive into that with me?
I mean, if you want to call it the powers that be that own the banking system. I mean, you just have to look at the Federal Reserve, look at their charter, who owns them. It's a private institution. It's not, uh, it's not federal by any way, shape, or form. It's owned by 13 banking families. I mean, number one family you got to say is the Rothschilds, right?
Mm-hmm. Yeah. Yep. When you were out on Wall Street, could you, I mean, and as it relates to, people pulling the strings and stuff, were you exposed to ideas or things that alluded to that kind of early on in your career, or has that just been through alternative sources to kind of get to that, arrive to that destination, so to speak?
Yeah, that's through alternative forces. I mean, when or sources when I worked on Wall Street, I mean, I worked uh, as a retail broker for 23 years and 12 as a branch manager. I can tell you, I worked at EF Hutton for a short period of time until I think I was 3 months in when they pled guilty to check kiting. I moved to Merrill Lynch, and the culture that I saw within those two firms was certainly not, customer first. And I spent the last 15 years of my career at AG Edwards, and I got to say, that was a fabulous company. They absolutely put the customer first, but that was an old school, old line firm, and their way of doing business was dying at the time. Um, so I'm just saying that, Wall Street does not have your best interest at heart.
What are perhaps some misconceptions or things that you feel don't receive enough attention as it relates to financial markets? What's going on in the world that you'd like to bring to light?
Well, I mean, it's too light. It's known that the whole system is fractional reserve. But there's a quote by Henry Ford, and I forget when it was, in the 1920s or 30s, that if the population understood how the banking system really worked, there'd be a revolution before the sun rose tomorrow morning. And that's a function of the system being fractional reserve. People don't understand. The average person doesn't even know what fractional reserve means. Uh, and those, many that do know what fractional reserve means, it's like, oh well, it doesn't matter. It's working. It doesn't matter till it matters. Well, at some point in time, it's going to matter because all Ponzi schemes fail and all credit bubbles eventually burst.
Yeah, it reminds me of Voltaire's quote. I heard how he was talking about that. I guess that Mississippi company or something. I was reading about how that that bubble crashed and everything went to zero. Um, Bill, is there anything else? And then also, how can people learn more about you and get in touch with you?
Um, as far as anything else, I would just say if you're aware of what's going on, what the problems are, and you're considering prepping for it, do it as fast as you can and do it to the best of your ability. And only you know whether it's to the best of your ability or not. I mean, don't lollygag at this point because we're in the very, very late stages. If you want to read my work or reach me, you can go to my website. It's billholter.com. There is a contact button on there. If you've got questions or you want to do business in the precious metals field, my business email address is bholter at proton.me.
Bill, thanks so much for making an appearance. I hope to have you on in the near future.
Thank you, Christian.
Quick ask: over half of you who watch the show regularly haven't yet subscribed. If you've enjoyed the show, you're finding value in it, subscribing is really the best way to support the channel. It's, of course, free. It literally takes 2 seconds, and it lets the algorithm know that this content matters. And of course, my commitment to you is going to be that I'm going to continue to bring on great guests, refine those questions. And of course, I'm always receptive to your feedback. If there's certain people that you'd like to have on, or certain questions, or this, that, and the other that you'd like to have as part of the show going forward, things of that nature, please let me know. I'm pretty easy to access. Anyhow, that's my commitment to you. If you can subscribe, that would mean a lot. Thanks.